This is the income tax table from IRAS to determine which income tax bracket you're in and how much taxes you have to pay. Let's break it down and find out which bracket you're in. To find out which income tax bracket you're placed, firstly, log in to the IRAS portal. Then, navigate to Notices or Letters. And then, click on Individual and scroll down till you see Notice of Assessment for Individual for the latest year of assessment, and then click on it. Once you downloaded the PDF, open it and you should see your notice of assessment in this format. Bringing your attention to the chargeable income column, this is the actual figure that determines your income tax bracket. In this case, a chargeable income of 38k would place you in the first 30k bracket, which means that for the first 30k of chargeable income, there is a $200 flat tax, followed by a 3.5% tax rate for the balance of $8,739, which amounts to 305.87. Take note that it happened to have a tax rebate of $200 for this assessment year, but it may or may not be there for future assessment years. Diving deeper into how the chargeable income is derived, the generic formula would be income minus deductions will get you your chargeable income. Your income would consist of all forms of cash inflow, which includes your gross income, all allowances, cash benefits, and bonuses. Moving on to the deduction portion, under this portion, your CPF contribution would most likely be the highest form of tax relief. In addition to tax relief from CPF, there are a whole list of qualifiable tax relief listed on IRAS website. Do read up more on IRAS webpage itself if you are interested. But most of the time, the tax reliefs we are entitled to are automatically included in our tax assessment. To reduce our tax payables, we have to increase our deductibles so that our chargeable income goes down. One of the easiest way is to do a cash top up to our own CPF account capped at 8k per year, as well as topping up our family members' CPF account up to an additional tax relief of 8k. By doing so, it can potentially bring down our tax bracket one tier down and reduce our tax payable. One useful tip and reminder for you is that you do not have to top up the full 8k or 16k to drop your tax bracket. Just do your homework and calculate your chargeable income by the end of the year and see how much you need to top up to drop your tax bracket. Usually, this is more applicable when your chargeable income is closer to the opening value of that particular bracket. If your chargeable income is closer to the end value of that bracket, it is more likely that you won't be able to lower your bracket even if you top up the maximum amount. So do take note of that. That said, there are scenarios where you will still want to top up your CPF for the tax relief. For instance, if your financial health is good and have the spare cash for top-ups, you may want to consider it, as the cash that goes to your CPF account is still yours, whereas payment for the income tax goes to the government.